Bonjour à tous. Hi, everyone. So I think we are ready to get started. So my name is Steve Ochinger. I'm the Chief Operating Officer at Euroconsult. Happy to be here with you this afternoon. Thank you for joining us and waited a bit for this presentation. Thanks for attending. So I'm going to present the dynamics in the global space economy. Maybe a presentation a bit different from what you've got today and yesterday. Essentially talking about business numbers, showing some slides and some graphs. I thought it was maybe interesting to talk about the space economy, as this is a topic of recurring importance, obviously, in the industry, in the sector. A lot of people are talking about the space economy, and justifying investments with respect to the size of the space economy and so forth. But maybe sometimes as well there's a bit of confusions with respect to what it is really much. And I'm going to try to clarify a few things and give some perspectives. So let's start. Very quickly about who we are. Euroconsult, we are an independent consulting and research firm in the space sector. We are 100% dedicated to space. We are based in Paris, close to here actually, and we are a team of around 80 staff members located in different world locations, as you can see, and we are providing different services to support decision making in the space sector, including consulting, market intelligence, conference organizations, and training. And that's all on the marketing pitch, and then I'm going to switch directly to the content. All right, so what I'm going to try to highlight in the next 30 minutes. Talking about the global space economy, again, highlighting a number of things and concepts. Then after I'll try to, depending on the time, do two deep dives, one on the institutional context and one on the industry context of the space sector. And we'll see how much time we have to cover all of this. Good, global space economy. So, talking about numbers, the space economy globally in 2021, we value it at $370 billion US. Pretty dynamic environment and trend, as you can see, growing basically 30% compared to 2016, where it was at around 285 billion. There's been corrections the last 2 years due to COVID, obviously, as in many sectors. And we expect the space economy basically to grow up to 640 billion by 2030, which is basically a kind of ratio of 70%. We'll see the details afterwards. But what we can say is that the global space economy is, generally speaking, experiencing strong growth, strong market dynamics. There is a number of new supply and demand drivers that we're going to see right after, disruptive innovations, and overall transforming business models and transforming the positioning of the market players, either the established one or the new entrants. I'm going to highlight a number of points right after. By 2030, CAGR, so annual growth of around 6% on an annual basis, and this is twice as much as the world economy. So again, pretty dynamic and justifying a number of investments, obviously, and the growth of investment in the sector. However, first clarification, space economy doesn't mean space market. There's a difference between the two. The space market basically is related to the proportion of the investment and the money which is actually contracted to the space industry, either from commercial operators or commercial stakeholders, more generally speaking, government stakeholders, whether civil or defense. And the space markets, meaning what is actually contracting and what is contracted and what is actually making revenues for the space industry, is estimated in 2021 at $337 billion, so a big chunk of it, but still only a portion of it. The rest, the 33 billion, is what you will see money basically retained in-house, typically by government agencies for internal operations, salaries, their own R&D, and so on. So not on all of this, again, is contracted by to the space industry. One thing that is not included here is the private investors, which we could actually include. Roughly speaking, 15 billion in 2021, so that would make the total number at 385 billion in total. We don't include private investments just for the simple reason that it's impossible to forecast, and for consistency, clarity, and for, I would say, accuracy, we prefer not to include it when we are counting these numbers, because again, for forecasting exercise, that would be not accurate enough, I would say. Now, I go. If we look at the global space market, so as we said, 337 billion in 2021, how it is breaking down? You can see here the breakdown of these numbers across the value chain, from upstream to downstream, manufacturing, launch, ground segment, satellite operation, and services. As you are certainly aware, the vast majority of the revenues, of the money which is made in the space business, is made downstream, on the services side. 90%, if we take all customers, government, commercial, defense, and so on, 90% downstream, 10% upstream. If you count only the commercial part of the business, if we take only the commercial space market, actually the proportion of the downstream services will be much higher, around 95%. So the applications, and we're going to discuss that as well later on, very much driving the money and the revenue making in the space market. And because of this, satellite navigation and satellite communication dominates largely the space market and the revenues in the space business. 41% related to satellite communication. In 2021, this is a stable ratio. 50% related to satellite navigation, 5% for Earth observation, and the rest essentially 4%. The commercial market accounts for roughly 80% of the total market value. Why do we have this domination of satellite navigation and satellite communication in this proportion? That's because of the existence in these two domains of a large B2C consumer market. Satellite TV. So we don't speak a lot anymore about satellite TV, but it's still $100 billion. On that number, it's $100 billion alone made by satellite TV. Decreasing, but still important. Satellite navigation, we're talking about chipsets for your GPS, for your sat phones, and APIs for LBS and personal location-based services and so on. So this mass market, this consumer business is essentially dominating revenue making, and this is why satellite communication and satellite navigation dominates the whole picture. I will come back to that in one moment. An important element as well is the difference in the structure of the industry. Upstream versus downstream, the structure is radically different. You can see if we look at applications, upstream is very, it's not fragmented, but it's distributed among applications, satellite communication, Earth observation, space security, manned spaceflight technologies, and so on. Downstream, you have the domination of two applications, satellite communication and satellite navigation, making 98% of the total value of downstream, again, because of B2C services. An interesting element is the share of Earth observation that you can see. Downstream only 2% because there is no mass market in Earth observation. We're talking about a niche satellite application. While upstream, Earth observation makes up to almost 30% of the revenues of the space industry due to the size of government Earth observation markets, government Earth observation programs that are very expensive, very costly, basically, to implement, and ensuring significant part of the revenues of the space industry upstream. Finally, on the fundamental differences in the market structure is also related to the client of the industry, upstream versus downstream. Upstream, you can see 2/3 of the business is made by government programs, civil agencies, defense. Downstream, 90% basically is related to commercial services, and again due to the B2C and with respect to what I said. So again, a big difference when we are talking often about the space economy. I think it's important to recall that at the end there are very different pictures, different structure of the business, and as well as different dynamics. Last point on this. If we zoom at the commercial satellite value chain, only on the commercial portion of the business, you have the three typical satellite applications, satellite communication, satellite navigation, and Earth observation. Satellite communication, you can see that the structure and the shape of the three value chains are very different. Satcom is the historical commercial satellite value chain due to the emergence of satellite TV in the 1990s. So it's the only actually mature, I would say, some level of maturity in the value chain because you have money made at each step of the value chain. Again, satellite TV, 100 million on that portion of 114. Satellite navigation has emerged as the lead satellite services business due to the huge expansion of GPS-enabled or Galileo-enabled services for our everyday life. But upstream, there is no commercial activity because these systems are paid by government. We are talking about government systems, so that's why you don't have revenues upstream. And you can see Earth observation still as a nascent, as an emerging commercial value chain, because here again you don't have a mass market downstream, which is not basically pooling all the demand and all the money and all the all the system, even though there are a number of actions and projects to unlock a number of applications and business. So when we're talking about the space economy here, I think it's important to remind that the portion of what we really call the space industry is not that big, because when we're talking, often when people are talking about the space economy, they are reflecting about the 370 billion or even sometimes $1 trillion economy. This economy is actually very much depending about what is made downstream by service providers, which are media company, telcos, chipset manufacturers, service providers developing applications on your phones. Not really much space industry, right? They are enabled, all these services and applications are very much important because they are driving requirements upstream for the infrastructure, but this is not the core space industry. If we are really talking about the core space industry, which should be here, the manufacturing, the launch, the ground segment, the operations, and the services that are vertically integrated in the value chain, we are more talking about a 60 billion market size, basically. So important to put numbers in perspectives. Now, let's go to some specific elements, first on the institutional context and then on the space industry. Often when we are talking about new space, we talk about commercial new space. I think new space is also very much about government, and we see this with the level of new entrants, new countries investing in space globally. The number has almost tripled in 20 years, from 30 countries investing in space in 2000, and we are now almost at 90 countries in 2021. Because space is increasingly integrated in the development strategy of nations, socioeconomic development, diversification of national economy, technology, investment in innovation, capability and capability building, and so on. This is increasingly important for a growing number of nations, and they have identified, many of them have now identified space as a fruitful investment for their national economy diversification strategy. So this is pushing the number of countries investing in space up. This is as well pushing the global investment in space, globally speaking, above 90 billion today, close to over 100 billion by the end of the decade, 110 billion expected by 2030, both by these emerging countries, but also, and primarily speaking, by the leaders, by the top 10 or the top 5. As you can see, even if there is a diversification in the landscape, still the top 5 countries are basically investing in the vast majority of the money and are accounting for over 80% of budgets worldwide. And compare, even if there's a bit of dilution, but this dilution it remains marginal. And again, there is a strong concentration on the investment in the top 5 or the top 10 countries. You can see here the space investment map. So what I was saying, that there is a huge there is still a diversification, so still a concentration into a number of space powers. But when you are looking at the map, we have the same map. 30 years ago, you had 12 countries. Now we are speaking about more than 80 countries, and we see dynamics in Latin America, in the Middle East, very much in the Middle East, in Asia, likely as well. It's not likely, clearly the most dynamic region with the apparition of new global leaders, new regional leaders, and so forth and so forth. So this is creating opportunities of partnerships between countries, market opportunities for industry players, but this is as well creating some competition regionally or globally. When I was saying about emerging space programs, so here just one slide highlighting the pace and the shape of new entrants. As I was saying, that there is an increasing number of countries entering into space. You see on the chart on the left these new entrants number on a yearly basis. What I think is more interesting on the right is the value, the cumulative assets of the value. The cumulative value of the assets procured by these nations, say Morocco, Peru, Saudi Arabia, Thailand, and so on. You see the exponential growth of the value of these assets, because these countries are not only investing anymore on cheap satellite systems, but they are investing more and more into very complex systems. When you are looking at, for instance, the investments of the UAE today in their Earth observation systems, or even in Peru, they are basically acquiring leading-edge satellite communication or Earth observation satellite systems. So this is pushing the value of the investment, but also this is changing the kind of assets that they are procuring. So it's not only about technology demonstration anymore, basically. Two drivers that I would like to highlight for the next decade. First, space exploration, and then security. The current decade is the decade of exploration that was expected following the decommissioning, but following investments in the International Space Station. There was the necessity for countries to find and agencies to find new targets, new programs, new ambitions, and there is a convergence that was long-awaited convergence, but there is a converging agenda worldwide for towards the moon, then likely Mars. This is pushing the number of missions, as you can see, from in space exploration, generally speaking, from 50 missions last decade to 130 missions. Next decade, likely again converging on the moon and pushing investments. So we are basically looking at a growth of investment by a scale of 50% between 2020 and 2030. So significant investment growth in space exploration. The moon agenda is interesting at multiple aspects, technology, obviously, science, discoveries, and so on. But I would highlight two elements. The strategy of cooperation, because this is really reshaping the way countries are worldwide organizing their cooperation. We used to have multilateral cooperation in space science for the ISS and so on. And with the moon and the space exploration projects, this is we have clearly a different approach with more bilateral strategies followed by the US with the Artemis Accords, basically, so a succession of bilateral agreements instead of having a multilateral agreement framework, and likely as well the formation of blocks with, on the one hand, the US bloc and Western bloc, led by the US, and on the other side, China and Russia. And with the current situation, this is clearly we are clearly seeing an acceleration of this formation of blocks. The other interesting elements on the space exploration is the apparition of a new potential market or a new economy, what we call the lunar economy, with for the first time private investments for space science, for science-type missions, but because there are some expectations with respect to the commercial outcomes that could be generated by the exploitation of lunar resources. But this is really brand new. This is generating new type of partnership, next new generation of public-private partnership. And it's going to be very interesting to see how these PPPs or private sector involvement is going to happen in the coming years. I have 10 minutes. Okay. The next driver is security, and unfortunately, when we see the recent news, this is only confirming this trend. There are growing concerns about sovereignty, about security. Instability in the geopolitical environment is pushing countries to increasing their investment for military space or security space. So actually this is a chart that was made earlier last year, so before the situation in Ukraine, so there is no impact on this slide directly, but I think it's going to actually accelerate the trend. We see by 2025 only, but between 2015 and 2025, a growth of in military space by a factor of 69%. So above $40 billion expected by 2025 on a yearly basis. So we're talking about 40 billion per year. So this is going to be an all-time high, pushed by historical players, obviously the US, big chunk, a big portion, as you can see, of the total investment. That's historical truth. It's not something new. But also a number of new countries, emerging countries, but as well European countries investing in their own assets for security. there is both the issue of space assets used for security on the ground, but also the issue of security in space and the protection of space assets, as you are aware, with the space situational awareness, SSA, NSST, and so on, which is a growing concern for countries. And this is materializing typically on the governance with the creation of Space Force or space commands, basically, and dedicated entities inside military agencies to deal with space. Okay, quickly on the space industry, I'll try to keep in 10 minutes. Now, coming back to industry issues, as you all aware, because you are part of it, basically, but the commercial industry is in mutation, profound transformation, profound mutation all across the market segments, and leading to both technology push, market pull. There is a reshuffling in the industry with new players coming in and so on. Very quickly on some trends, starting upstream on the left side, both on the manufacturing and on the launch side, we see a number of similitudes, similar trends with respect to technical innovations required basically to better address end-user markets. So this is leading to payload innovations, for instance, to the advancement and the progress and the investments into constellations, shifts as well in the launch industry with reusability, ride shares and so on to better accommodate market needs. So on the one side, technology innovations, but also the requirements to be always more cost effective and to move away, which is the new space objective, to move away for expensive assets to a much more distributed architecture and more always most cost effective, looking for cost optimization. As well, upstream, we see a significant evolution in the structure of the industry with a consolidation, vertical integration between existing market players, and as well new entrants, both on the manufacturing side and on the launch side. We see these trends clearly. We'll come back to some elements later on. Downstream, what is interesting is that we see the same situation for Earth observation and satellite communication. It's interesting because these are typically two applications that have been essentially that have evolved more separately without necessarily a lot of similarities. But today we see this, a number of similar points. Massive capacity increase. You see a huge number of operators, whether in Satcom and in Earth observation, launching huge capacity. This is leading to price pressure, whether for bandwidth and for data, so massive decrease in the price points. And the shifts from historical markets, for instance, broadcast to connectivity in Satcom, and for Earth observation, typically from data to services or from typical defense customers to new types of verticals. As well, in downstream, we see, especially on the satellite operation side, the shift to hybrid infrastructure. So again, the distribution of the infrastructure, the constellation impacts, rather than to have, and having multi-layers architectures, rather than relying on one single type of architecture. We are seeing as well, so first on the satellite industry and then on Satcom and Earth observation quickly. On the satellite industry, the new space revolution or new space situation environment is leading to a change in the order of magnitudes of and change in the level of KPIs that we are used to basically known in the satellite industry. We are expecting by the next 10 years to have basically around 1,700 satellites to be launched every year. This is 4 times much more than what we had in the previous year. So massive increase in terms of satellite to be launched, but as you can see, almost 60% of this related to only 5 projects. So a huge concentration of this demand on this satellite growth that is related to basically 5 projects worldwide. And depending on their ability to materialize or not, this is going to impact this chart. Small sat is obviously important in number. 90% of the satellite to be launched will be small sats, but in terms of market value, much lower, less than 20%, because we are talking about cheap satellites, right? So GEO satellites and larger satellites and GEO especially remains very important for the industry, especially for the commercial industry, and will still account for 1/3 of the market value of the satellite industry. And obviously as well, it's very important to recall that governments are an essential customer. 75% of the market will still depend on government programs in the next decade. So obviously, yes, there is a commercial revolution, but the fundamental of this industry remain on the government. Satellite revolution, question mark. Yes, of course, the small sats is revolutionizing the industry. This is pushing up satellite demand, as you can see. And this is leading as well to a change in the dynamics by applications, as we say here. I think what is interesting as well behind this graph, obviously, yes, there is a growth in the total market volume. But at the end, what is really addressable for the market players? And this is, I think, the key question, because when you are looking about commercial constellations, or either the mega constellation or the large constellations, a lot of these constellations are actually vertically integrated, meaning that the operator is manufacturing its own satellites. Starlink, typical example, but it's not only the only one. It's also the case in Earth observation. So the proportion of the captive market, or basically what is actually not addressable, as we say, which is not open for industry players, is increasing. So this is the first point. The second point is that with the constellation impact and effect, there is an effect of the winner takes it all. Either you, in the competition, either you win the 1,000 satellite fleet or you lose it. So this is really changing the competition dynamic in the industry in terms of addressability, in terms of open market, and in terms of potential as well, sustainability. And this is why, even though there is a growth in the number of satellites to be launched, we still expect that there's going to be consolidation and restructuration inside the industry because of this changing in the market landscape and then the structure of the market, of the commercial market, and the level of addressability and opening of this openness, of this market. This is as well very much affecting the launch sector. There is a huge interest for market players, launch market players, to enter into the business to serve basically all these numbers of satellites. Still, it's very important to recall that this is a difficult market. The launch sector remains a difficult market, the low margin, there is a challenging in profitability, and the market players, the new entrants, have not demonstrated yet their ability to be profitable over time, and they are still very much relying on the government, again, still accounting for 75% of the launch revenues, and they are key to close the business case, and this is why most of the new players, new launch players, they are at the end working in the US, because this is where most of the demand is, basically, or Europe. Checking. Shift in the Satcom market, I don't know actually. What I propose, and maybe I'm gonna stop because I think I'm running out of time. Do I have 5 minutes more? I'm just checking if I have 5 minutes. Okay. So quickly on the Satcom market, as I said, shift from historical video market, which used to be the bread and butter of the Satcom business, and shift to data and connectivity and basically broadband type of application. This is leading for the number of years of a stagnation of the revenues of satellite operators, commercial satellite operators, because they need to rethink their business model, rethink their approach, rethink their architecture. So yes, there's going to be a growth coming in that we're expecting, driven by data, but this is as well requiring significant investment in new type of architectures compared to video broadcasting. This is leading to the apparition and to the development of what we call the NGSOs, so the mega constellations, as you know, that are disrupting the Satcom ecosystem. I would say disrupting at several levels. They are disrupting because there is no business model proven yet, first. None of them has demonstrated their ability to have a sustainable, either to close their financing or to actually have a proven profitability on their business. So there's still the question on this. So this is challenging the environment because of that. They are providing as well a new level of scale. They are clearly upscaling the capacity which is currently available and launched. By a factor of 20, we expect. So currently, we are 2 years ago we had a total capacity worldwide of 1 Tbps. In 4 or 5 years, we may reach 20 Tbps in the business. So this is really upscaling significantly the level of capacity in the market. So for existing market players, this is really challenging, and this is why as well existing market players are not so much investing in their fleet, geo fleet, because there is the necessity for the existing market players to see what's going to happen with these mega constellations. And the other impact is obviously the space sustainability issue, because with all these satellites to be launched, 8,000, 10,000 in total for these mega constellations maybe, there is a kind of appropriation of the constellation of the LEO orbit, as you are aware, and this is creating as well some issues with respect to access to the LEO orbit and space debris issues. I will close on Earth observation, because Earth observation is also very dynamic. We say a boiling Earth observation market. Similar to Satcom, as you can see on the left side, we see a significant increase in the number of commercial Earth observation satellites in operation, so what we call capacity uprising. 700 satellites to be essentially commercially available for supplying Earth observation data by 2025-2030, essentially related to constellation. But what is maybe even more interesting is not necessarily the level of capacity, but the diversification of the capacity. In the past, in the recurring past, it was essentially, we were essentially focusing on optical, high resolution, high revisit system for premium customers, defense and energy and this type of customers. When in the future we are, as you can see, for 2020, for the next decade, we are looking at much more diversification of the supply with hyperspectral, SAR, GPSRO type of payload, because there is now the strategy of these new players, these newcomers, to find the new niche, basically to serve efficiently specific niche of the market rather than to try to cover everything worldwide. Upscale in fundraising, there is as well some changes in the data delivery process and with IT, AI, and so on, but I'm not going to go into this. And I will just finish on 2 slides on fundraising, because this is very much illustrative of what we are seeing right now, with the strong appetite of investors in the space sector, and especially in Earth observation. You can see on the left side the growth, the significant growth of fundraising, money raised by Earth observation companies in the last 10 years. Growth as well, and as they are evolving in their financial requirements, with now round A, round B, round C. And as well, as you can see on the right side, we see a number of companies raising significant amount of money, over 100 million, several companies raising over 100 million last year. The last point, which is a question I think for our industry, is the SPAC, the effect of SPAC, which you may be aware of, that are a process for companies to raise funding and do an IPO without the constraint on the IPO, basically merging with the company which is actually publicly traded for the purpose of actually merging with an existing company. So this is this merging between the SPAC and Earth observation, or in the launch sector as well. More generally in space, there's been a trend towards SPAC mergers. What is, I think, a question for the industry is the sustainability of this trend. As you can see, there is clearly an imbalance between the revenues that are, if you look at the company valuation and the company revenues, there is clearly an imbalance between the combined revenues of the companies that have done a SPAC last year, which is basically around 200 million, and the total valuation of this company, which is roughly 7 billion. So there is a ratio of almost 40 between the revenue they make and the money and the value and the valuation of this company. There are 2 ways of interpreting this. Either there is a strong confidence of investors that these companies have a huge potential, but there might be as well some, I would say, disproportion, which could be an issue at some time due to the request by these investors at a point of time to have a return on investment. So at some point, these investors will require return on investment, and if these companies are not able to generate this return on investment, this might be an issue for these companies. But I would say, more generally speaking, for the sector and the confidence of investors on the capability of the sector to generate value. So there is, on some aspects, it's a positive factor, but I think we need to be careful on not to have too much disproportion between revenues and actual valuation of these companies. Final slide, 5 points I would like to raise as a selected takeaways. Obviously, the pandemic crisis is an accelerating factor for any economic sector. This is true as well in the space industry. It has accelerated the transition in the industry, especially on the digitalization of the industry. We haven't talked about this, but this is an important element. The lion's share of the space economy remains concentrated downstream. It's a truth for the history of this business, and it's going to be true in the future. And the market players which are making most of the money are not necessarily part of the first circle of the space industry. That's what I said earlier. Government support is key to help the industry to reshape and to get the strong business opportunity. I think it's important to remind that the space industry remains very much a government-centric sector. There is no shortage in demand for space capabilities, but if there is a growth in demand, they are requiring this growth. This new market demand is requiring new business models in plural, and to be able to capture growth. And last but not least, as I said as well earlier, a strong consolidation and vertical integration is expected to continue because it is already engaged, and it's expected to continue following the current expansion phase of the sector. And with this, I'm closing my presentation with a few minutes late, and I thank you very much for your attention. Thank you.